Hello, everybody, and welcome back to the Cryptoconomy Podcast. Today, I'm very excited to have Jakob, the CEO of Hermetica, a USD stablecoin built on Bitcoin. So, Jakob, thank you so much for being here. And if I butchered the description of Hermetica, please reconcile that. But just to get started, I think we'd love to hear a little bit about you and just a very high-level overview of the project that you're working on. Why you decided to work in the Stacks ecosystem would be great.
Yeah, absolutely. Yeah, thanks for having me. And the description is spot on. We are a Bitcoin-backed yield-bearing stablecoin that essentially couples a spot position with a short futures position. That's how you can think of it. We take Bitcoin and we hedge it out on the futures markets. We create a synthetic dollar, and then we issue that dollar value on chain as a stablecoin. And then since we're short the futures markets, we're harvesting funding rates. We can go into detail on how that works and what that is. And we pass on the yield from that to folks that stake the stablecoin. So there's a stablecoin. You can stake it, you get a liquid staking token, and that is a dollar yield that is fully backed by Bitcoin. But to answer your... No, go ahead.
Sorry, I was just going to say, I love that you just started right away by just explaining like where the yield comes from. I think that's the thing that like all question. Right? But no one wants to ever answer it, right? And that's the funny thing. So I think just kudos to you for starting there, but go ahead.
Yeah, I mean, we're super transparent about it. It is a market mechanism that is sustainably generating yield. We can go into why that is the case and how it historically has performed. Obviously, I don't know what the future holds. I can't predict the future. But it is a real market activity that we're harvesting and passing on. And that's why we're really excited about the yield. And that's why we're so upfront about it. But to quickly answer your second question about my background, Jakob, founder and CEO of Hermetica. My background is as a software engineer, as an entrepreneur, really, and as a enthusiast of Bitcoin. I've been in Bitcoin since 2016. Fell in love with it back in the day, and still am in love with it. I think it's the most important technology that we have for human freedom. And so I've dedicated my professional life to that. And took a couple of twists and turns, built a Bitcoin mining business back in 2018-19, and got into Kraken. I worked at Kraken for a while as a Bitcoin aligned exchange. That was very interesting. And then since really 2022, I set out to build Hermetica and contribute to Bitcoin DeFi and making that a reality. And that's where we are now.
That's awesome. And yeah, Kraken, I feel like if I was going to work for any of them, Kraken seems like that'd be the place to go. They seem like they are the most focused and, the most hardcore of at least the like tier one central exchanges. But what was your experience, I guess, moving from some of these bigger, organizations to starting your own? Did you kind of like take some of the learnings? Was it like, just not for you? Were you always kind of wanting to go out and do your own thing, or how did that come up?
I've always been an entrepreneur. I started my first business when I was like 14, like buying and selling stuff on eBay, like paper routes. I always had like the hustling gene in me. I built a business in emerging markets in my 20s. That was offline. It was eyeglasses businesses. Actually, we produced and sold eyeglasses mainly in sub-Saharan Africa and Brazil. And so always had my own organization, built my own teams. When I got into Bitcoin, I really wanted to understand more of the industry, and that what led me to Kraken. To be honest, I'm not built for big organizations, so it was not
me either.
Most enjoyable period, but you definitely pick up a lot, right? Like these organizations Kraken at the time was, I think it went from 2,000 to 3,000 people when I was there. It's just like there's a lot of coordination that needs to happen. There's a lot of really smart people in there. There's a lot of interesting decisions that need to be made. And so it was definitely very instructive learning experience. And it taught me about the rest of, I was very focused on Bitcoin at the time, and it taught me about NFTs and Ethereum and Solana and all the other DeFi elements that came online since.
Oh, that's awesome. So as you were looking at all the like DeFi elements, you've got Solana, you've got, now you've got ordinals, you've got runes, you've got so many protocols to kind of like pick and choose from. How did you decide where to start, what to focus your time and energy on, and sort of the strategy to differentiate yourself from other native stablecoins on different chains?
Yeah, that's a great question. I think, in general, if you look at Bitcoin DeFi, all the primitives have to build out, right? Like, especially when we started like 2 years ago, Bitcoin DeFi was not even like a thing that people talked about.
Yeah,
like Bitcoin was just was a pet rock, right? And so really since then, the journey is about understanding, okay, what are the primitives? So obviously we need lending protocols, we need DEXs. Those are like the core infrastructure for any ecosystem, and those are getting built out. But if you look at any other DeFi ecosystem, be it Solana, Ethereum, or any other ones, one of the major elements is a stablecoin, because stablecoins are the lifeblood of any economy. People love the dollar, and having a digital representation of a dollar is an industry in itself. I think it's like one of the main product market fits that we have in general in crypto, especially in DeFi and especially in emerging markets. And in our view, the stablecoins that exist, USDT and Tether, they're great. I actually just sent a USDT transaction 5 seconds ago before I got onto the podcast. I use them every day. But in the long term, if we are to build a decentralized financial system that is not part of the fiat system, we have to get away from, let's say like this, we can't build that system with one of the foundational assets being a fiat asset. We need to create stablecoins that are outside of that and are independent. That's what led us to ideate and then build USDh, which is a stablecoin that is pegged to the dollar, but doesn't touch the fiat system, right? So we're a dollar asset that you can use in Bitcoin DeFi, but we don't interact with any banks and we don't hold any fiat, and so are completely independent from that system. And that's what led us down that path. And obviously, if you look at stablecoins and especially crypto Bitcoin-backed stablecoins, there's different variations and mechanisms of how you can do it. There's really two main ones. There's flavors of those, but two main buckets, which is over-collateralized stablecoins, and then what we use, the delta neutral or future-backed stablecoin. And in our view, the over-collateralized stablecoins have their benefits, right? They're usually more decentralized because you can do it with smart contracts fully on chain, but they have severe downsides that actually make the user experience and key elements of the protocol very difficult to scale. And you have seen that in Solana, or mainly in Ethereum, where you have DAI and Liquidity and other stablecoins that have really not gained mass adoption or a critical scale, because the user experience, if you have to lock up Bitcoin to then mint a stablecoin, is more akin to actually creating leverage or lending protocol. So you're creating a liquidation point, which doesn't create a great user experience, but also makes it very difficult to maintain the peg, because if you want to arbitrage that peg, you need to now liquidate people, which is not is an awful user experience and actually really difficult to do at scale. And the other element is that there obviously there's no yield. You actually have to pay to create that stablecoin. And with us, there's actually a yield component to it. And then if you look at finance in general, and I have a background in finance as well, finance love capital efficiency. Those kind of systems, over-collateralized systems, are a good starting point, but they're very inefficient capital-wise. You have to lock up 50% or sometimes more of your capital that is completely unused. And so creating a fully capital efficient system where for us, we can issue 100% of the Bitcoin value on chain as a dollar, it just makes a ton more sense. So we looked at those trade-offs and decided that the delta mechanism is a very good addition to the ecosystem. Obviously, there's a lot of different alternatives and a lot of experiments, and I'm all for that. I think we need to experiment across the board to find the right mix of things, and that's what we thought we should bring to the table and have built.
I think that is the way to do it. All the smartest people I've met, when I've asked them how it should be done, they pretty much describe how you guys have done it. So I think that is the right move. But I think it's interesting that it's so foundational, but so many people seem to have gotten it wrong throughout the years, or they get greedy, they end up under collateralizing it, they slowly, remove whatever is backing it, and they start to print more. It just seems like it always gets into shaky territory, and it's hurt a lot of big protocols as a result of them just not having a great business model behind it, and also not doing a great job of describing to people like what's actually happening under the hood and what decisions they're going to make at an underlying level. So I guess my question would be like, how do you feel about like competing against some of the bigger, more established players now? You feel like it'll eventually get to the point where there is like a winner take all system where we'll have, the US dollar stable coin, and that'll be across all the protocols? Do you think that, is what Hermetica would like to be someday? And also, I'd ask like how you feel about Circle and others that are very sort of antagonistic against certain use cases. So I ran a high-risk payments company. We touched anything that like Square, Shopify, Stripe wouldn't touch. So it was like cannabis, CBD, adult entertainment, supplements, a lot of like fairly legit businesses that you wouldn't expect would be considered high-risk processing. But we wanted to work with Circle, and they were like, well, you could try to integrate us, but we'll freeze your assets anytime we decide to. So like, what is that look like for you guys? How do you think about positioning yourselves in this sort of world where you've got the ones with a lot of like protocol level control and then those that are a little more decentralized, but it seems like there aren't too many that are really fully as decentralized as Bitcoin?
Yeah, I think it as decentralized as Bitcoin is basically impossible. I think as soon as you touch the fiat system, like Circle and Tether do, you have to comply with their rules because otherwise you're just going to be out of business very, very quickly. And so I totally understand it from a business perspective. I think it's great that we have those kinds of products on chain so we can actually use them. I pay my team in USDC every month. We don't have a bank account on the company level. We just use USDC and USDT. So there's certainly a huge use case for that. It is not different from having a bank account in terms of what can be frozen, and that is just what it is. Now, how do I see it developing? I do think that the Trump administration will bring out a stablecoin regulation probably in the next 6 months, which will be very interesting to see. I have no insight in how that will look, but that will, I think, make it possible for banks and other institutions to issue stablecoins. So I think we're like at the beginning, very early stages of seeing all money potentially to become a stablecoin. I don't think there's going to be a CBDC coming out of the US. I think Trump banned it, right? There's not going to be a central bank issued currency, but there's going to be bank issued currencies, private banks and other institutions. How that's going to play out, I don't know. It's really difficult to predict, right? I think there's going to be a proliferation of different stablecoins, just like you had like in the free banking era in the US, many different banks issuing dollar-backed stablecoins. Gold-backed dollars. Right? Like the different banks had their own dollars and they had different collateralization levels and had different integrations and were circulating in different regions, etc. And I think we're going into that kind of world where there's going to be many different dollars. They're going to have different attributes. Some will be fully fiat backed, whatever, treasury backed, etc., etc. Some will be Bitcoin backed, like ours. And I think there's a potential for us to see governments adopting a Bitcoin standard and issuing their currency on that Bitcoin standard, meaning backed by Bitcoin. And that is really exciting. I think that this kind of experimentation will lead to better financial products and better rails and a better user experience. And that's what we're here for, right? Exactly how it's going to play out, I don't know. We see USDH as the first dollar on the new gold standard, which is the Bitcoin standard. And we're here for seeing that flourish.
Absolutely. Yeah, no, I've been really wondering how it'll play out once the banks are actually taking on Bitcoin. Are they going to be like giving you a reasonable yield if, you're putting it in? Are they going to have a stable coin with some kind of yield on it? Is that yield going to just follow the market? Are they going to be sticking in DeFi protocols and try to take the spread on the yield that they can get somewhere else? Is it just going to be like a PvP against the banks based on like risk tolerance and yield? I think it'll be really interesting to see how it plays out. But I think
it's going to be fun.
It's always good to have competition with the banks. You don't want them to get too comfortable and have full control over it.
Yeah, totally. I think one thing that's really interesting that's going to happen now, I think the laws passed that allow banks to custody Bitcoin. And that means they're probably going to be issuing loans against Bitcoin. So like Bitcoin collateralized loans right now are actually quite high interest rates. So you pay like 10, 12, 13, 14, even more percent. And if banks can do that at scale, the rates there can probably considerably come down. So you could see like maybe 6 to 8% interest rates on that, which is, I think that's great because obviously that makes our Bitcoin more liquid and allows for interesting yield plays on top of Bitcoin, where actually the cost of capital becomes a lot cheaper. And so I think it's inevitable that banks adopt Bitcoin. And I think it's actually right around the corner, and it's going to be very good for the Bitcoin ecosystem and DeFi on top of it to see those liquidity flows in.
Absolutely. No, I'm excited. I think all this stuff is happening so much faster than I ever thought it would. It's going to create an insane amount of opportunity, and people who are getting out ahead of it now, like you guys who've been building through it, I think you'll be really well positioned for what comes. So I guess on the sort of yield side, it'd be awesome if you could just kind of describe in a little more detail in like the most layman's terms possible, maybe just like how the yield is generated, where what kind of exchanges you might work with, or just what that process looks like for someone who really doesn't understand it, and maybe how that can change over time. If there are certain times where you guys are doing much better than others, if it's consistent, if there's, any kind of like risk that people should be aware of, anything like that, I think would be awesome.
Okay, yeah. Okay, there's a lot of questions.
Yeah, sorry.
I'll try my best.
I'll
try my best.
Like.
Okay. So I think the best way to start is futures markets. Futures markets are paper contracts that are traded between people that essentially track the price of Bitcoin in the case of Bitcoin futures. And in order to peg the price of the futures contract to the price of Bitcoin, there's a system, there's an incentive system, that's how you can think of it, that is called funding rates, where people that are long the contract, that hold the contract, if the price is too high, it trades above the spot market, then there's a cost to hold that contract. That's how you can think of it. And that cost makes it so that people sell the contract down to come in line with the spot price. This is not very layman's friendly, but essentially there's a cost to holding a futures contract, and that cost varies with the demand for that futures contract. The mechanism is to bring that back in line with the actual spot market, the actual market for Bitcoin.
Essentially arbitrage, almost.
Yeah, it's an interest rate. That's how you can think of it. So if you have like one Bitcoin, but you want to have exposure of 10 Bitcoin, right? Because you're really bullish, you can buy 9 futures contracts, but somebody has to sell you those 9 futures contracts. Somebody has to sell you the exposure to Bitcoin. And in order to get that privilege to have the exposure to more Bitcoin, you have to pay an interest rate. Essentially, that's how you can think of it. You borrow Bitcoin from somebody else and you pay the interest rate to it. And in the futures markets, that's called the funding rate. And that's the mechanism that we use for generating a yield, because our protocol is short the futures market. So we sell futures contracts against the Bitcoin that we hold in the protocol. And you can think of us as basically a provider of leverage. We're selling leverage to the market. And since a lot of folks want to be long Bitcoin, we harvest this interest rate on a daily basis. It's actually getting paid out every 8 hours in the futures markets. And we take that and we pass it on to the users that stake the stablecoin. It's really not complex. To answer your other question, we trade on the 4 major centralized derivatives exchanges: Binance, Bybit, OKX, and BitGet. Those make up roughly 90+% of open interest. So over $25 billion in contracts. So a lot of open interest, a lot of contracts being traded. We do that not by directly depositing Bitcoin on those exchanges. I know how this sausage is made, right? On the centralized exchange side, it is, even though Kraken is one of the oldest and most secure exchanges, there's a lot of risk in exchanges because there's a lot of hot wallets and exposure to potential hacks. What we do is we put a custodian between that. So we have a custodian, Copper and Sefu to be exact, and we put the Bitcoin into the custodian, and then those custodians have settlement agreements with all the exchanges that allow us to hold the funds still on the custodian, but make them available at the same time on the exchange. So we can have our cake and eat it too, essentially, where we hold awesome. It in custody, but at the same time, we're allowed to trade. And then the settlement happens between the exchange and the custodian every couple hours, every day, depending on the exchange and the custodian. So that allows us to mitigate some of the counterparty risk, which is the main issue or the main risk that the protocol faces, is one of those exchanges going down, and then obviously not being able to, our funds will not be affected by that because the funds are in the custodian, but our positions would be affected in this case.
Yep, that makes perfect sense. And I think it's great you're decentralizing it, at least, and picking lots of exchanges, not relying on just one, like just anything you can do to reduce that risk. I think having the custodian, that's awesome. I didn't realize that you could do that, which makes sense. I mean, they do that all the time. So that does make me feel much better.
It's a really cool product that is offered by custodians. And futures contracts are fungible. So if one exchange goes down, we can open the futures contracts or the futures positions on other exchanges. And so having the ability to trade on the 4 major exchanges, and we're integrating with others as well, gives us a lot of flexibilities in our systems to manage that risk much more efficiently.
That's awesome. So I guess, is there a world where you would start working with like a Velar on Stacks if they get their perp checks going? Could you guys become essentially a provider there?
Yeah, absolutely. I mean, so we live in a world today where probably 95, I mean, Hyperliquid is bringing a lot of it on chain to some degree, but 95% probably still of the liquidity is on centralized exchanges. And so as more liquidity, more open interest goes to decentralized exchanges, we can obviously integrate with them and shift some of our operations over to decentralized exchanges. But in order to scale today, we need to be on centralized exchanges. I would love a world in 2, 3, 4 years where there is billions of dollars in open interest on Bitcoin DeFi, decentralized perp exchanges like Velar. We're actually partnered with them on the stable swap side. that we can then shift our operation fully on chain. That is the long-term goal. It's probably going to take a while for that to be mature, because also those markets, even if there's liquidity, they need to be very reliable and have very good latency, et cetera, et cetera.
Yep, that makes sense to me. You gotta wait until it's fully baked out. It totally makes sense to be where the money is right now, but it's cool that there will be a world where you can really decentralize it and not have to worry so much about the centralized exchange risk, at least.
100%.
So could you maybe explain just like what the yields actually look like in like percentage amounts? Like what can, a company like yours actually make on doing this? Is there like an upper bound that you've seen? Is there a low bound that you feel like you'll never go below? How do you plan for all the math that probably goes on in the background?
Yeah, this is a great question. We actually published a paper on the historical funding rate analysis. It's in our documentation. If somebody wants to really dig deep, you can find it. It's a lot of data and a lot of math. But to give like a high-level overview, essentially, if you look at historical funding rate data coming out of the centralized exchanges, goes back to like 6 years now. We see an average APY of 12% on this kind of strategy. That obviously fluctuates with demand for long leverage. So in bull markets, it's significantly higher. In the last major bull market in 21, we've seen 26% on the year. And then in bear markets, that can go significantly lower. It was, I think, it was 4% in 2022 on an annualized basis. Now, this is the whole protocol earning the yield. There's actually a nuance to it, because if there's 100% of the supply that is earning the yield, not 100% of the supply is actually staked and it's getting the yield, if that makes sense. So you can think of it as staked USDH is like a boosted yield. So if 12% is the annualized yield for the whole protocol, if only 50% is staked, that 50% would earn 24%. That makes sense.
Yep, that makes perfect sense.
And so
is the staking like locked? Do you have like a term length? Like how do you manage the economics and all that?
Yeah, so people can go in and out at any point. There's a 7-day cooldown period. So if you unstake, you have to wait 7 days to get your tokens back. But you can stake and unstake at any time.
How'd you decide on 7 days? Did you guys do a lot of like thinking about that? Was there like research on it? Like how do you pick a number like that? I've always wondered.
7 days is I think there's not a lot of like data on this, but it's like 7 days is like a usual term in finance to have contracts on, like options contracts and futures contracts are like 7 days usually.
Yeah,
that's
that
why.
makes sense.
The other one will be 3 days. Yeah, so the yield is very consistent. There's obviously negative funding rate periods. There's moments where people want to short a lot. We actually saw that last week with the spike down. There was a lot of FUD and a lot of fear in the market, and so a lot of people wanted to short that, and then the funding rate went negative. Funding rates are usually, when they go negative, only a spike down. They're very short-lived, usually go back up in 1 or 2 periods. In negative funding rate environments, what we do is we build up a reserve fund with the positive yield. So anytime there's a positive yield, we take 25% of that, we put it into our reserve fund. And then in negative funding rate environments where it costs us money to actually have the short open, we take out of that reserve fund. And so for the user, they only experience positive or zero yield.
Got it. Okay, interesting. That makes sense. So I guess how do you go about like growing your company from here? Like what is the, do you try to go partner with everyone and make sure USDH is, available in every wallet and, a basis of every exchange, and you have exchange pairs? Or what is the strategy of launching a new stablecoin on a somewhat new network with all these other players out there and all the attention divided between all these things?
Yeah, it's a great question. So our main focus today is Bitcoin DeFi and the DeFi markets that are coming online on Bitcoin. And that means for us, we want to be where the user is and where the liquidity is. Today, the major ones that we see in the market are on the Rune side, that's Bitcoin L1. There's a lot of liquidity there. There's probably not a lot of users yet because the user experience is still pretty slow. Stacks is another one that we're very excited about, that is live today and has a good ecosystem and liquidity. And then there's a host of other L2s that are actually being built out and are coming to market over the next 6 to 12 months. Some of them are well known, some of them are less well known, but there's a lot of really smart teams building Bitcoin scaling solutions. And so we're in conversations with, I would say, the major ones and close to a lot of them, and deploying to those ecosystems when they come online, because we believe that there's a wave of Bitcoin that wants to participate in DeFi elements, including earning yield and transacting. And we want to be one of the if not the stablecoin that is Bitcoin backed that they can tap into. And that is on the stablecoin side, but then also obviously on the yield side. The yield is really our major growth driver, and we're using the yield to attract more folks, which is really just making people aware of the fact that they can now tap into an institutional grade strategy to earn consistent dollar yield by just buying a token. And that token is on Bitcoin and fully backed by Bitcoin. It's a fantastic product. People really react very positively to it, and we see organic inflows. The limits that we run into right now is that those ecosystems are still quite nascent, right? There's I would say a couple thousand people transacting, and not yet tens of thousands or hundreds of thousands. So that's our expansion strategy on the DeFi side. We're also obviously very interested to talk to institutions that have or want to have exposure into Bitcoin or crypto. We're essentially offering a crypto exposure that is a lot less volatile and de-risked, right? You basically can get upside potential of Bitcoin. Bitcoin rips and gets really a lot of upside momentum. Our yields go up, but there's no downside, right? There's no downside volatility. So you can get exposure to Bitcoin in a stable way, if that makes sense.
Yeah, it does. And honestly, like so many of the clients I worked with at that payments company, a lot of them were accepting Bitcoin, but they were like, we do not want to hold Bitcoin because we don't know the market. We don't want to deal with it. You know,
they're
how
not
do
traders.
we swap? Right, they're not traders. But they couldn't easily like swap it into like any stable. Like I looked through every single stable and there wasn't like a single one that they could easily swap it into because they couldn't sign up for exchange accounts because they were like a regulated business.
Interesting.
And so like it was
Is that
basically
still
just
the
open
case?
market. It's still the case, and it's really ridiculous. Like because they're not illegal businesses; they're all legal, but the chargeback risk is really high. Yeah, no, but yeah, the chargeback risk is just high, so no one wants to deal with them. All these big companies are like, well, we'll take 90% of the market, the 10%, whatever. We don't want to deal with the whole
they're like sidelined.
That's required. Yeah,
it's interesting.
But all they wanted to do, and they couldn't get bank accounts either. That was the thing. A lot of them didn't have bank accounts because they couldn't get banks. They were actually
using
the perfect customer. Not really. No, they were basically just like, we will take crypto or cash. And then the crypto, they would basically like send to the founder who would like offload it on his personal Coinbase or something. Like it was a really janky system.
Yeah,
exactly.
Yeah.
But they wanted, that's all they wanted. It was pretty simple. And it was very surprising to me that like I could not find a solution that was workable for them.
DeFi would. DeFi doesn't need like KYC, right? In most instances.
But if you're on DeFi and you're using Circle, you're screwed. If you're on DeFi and you're using, most of the other alternatives, it wasn't really tangible. Like USDT in some cases could have been workable, I think, but there was still some risk from what I remember. I think it was like not explicitly permissible, so they could come at you. But and then you just have, the on-ramping issue where they all just have a nightmare getting, any customers to be able to on-ramp and to get into the Bitcoin system, and they'd love to. If there was a simple on-ramp where you could just put in your credit card, get a Bitcoin, send it right to their account, and have the whole transaction go through and be tracked and everything. A lot of them wanted to do that because they were paying really high fees for credit cards, like 10, 12% they're paying.
Wow. What?
Yeah. So it was actually almost cheaper to do like a multi-hop swap between like 10 different things.
12%?
And get it.
Because they're so high risk, so the chargeback is so high and they have to price that in.
Yep.
Makes sense.
But a lot of them, the risk was not actually that high when you looked at their, balance sheet and their numbers and what they were doing.
They're just priced that way because they fall into that category.
Yeah, there weren't that many providers. They really had to pick between one or two people. You had to get a bank on board. I knew the head CEO of every bank that basically went under because they were all the riskiest banks who were willing to take on sketchy business. And so then they have their banks go under and then they get desperate, or they just get randomly cut off by the processor who has some underwriter who decides the risk isn't worth it anymore and just like cuts them off. And then their whole business grinds to a halt overnight. Some of these guys it happened 4 or 5 times to, and they were just so like frustrated with it.
Why did you leave that business? Was that also why you left, because it was so difficult?
We ended up like getting an offer on it, so it was like a company that wanted to take it and use it for something more specific. But honestly, I wish we had built it out more. It was a good business. We basically just took Square, Stripe, Shopify, merged it all into one platform and let any high risk business use it. And it was the only business where people were knocking down my door as clients. Like they were desperate because they were like, our business just got shut off. We'll sign the deal tonight. Let's go. And I was like, okay,
That
that
sounds
was
like a
nice.
great business.
Like, solving a real market need, investors.
Totally.
We had a terrible time finding investors though. I was like, we got,
And nobody
money
wants to
coming
touch
in.
it. I mean, it's something you need
Yeah.
to bootstrap, essentially.
That's the problem. And that's the other reason it's not a very competitive market. Not that many people are willing to do that and put in the work.
Totally.
But I just found that like it was so perfect for crypto as a use case. And they all just desperately wanted to earn some yield on cash that was just sitting around. And I mean, strip clubs, for example, these guys, they're doing 3 million a month, sometimes a week, and that's just
pure
cash on hand, just sitting there. I was like, man, imagine that liquidity going into Bitcoin.
Yeah, I mean, it's interesting. Maybe we should talk more about it offline.
Yeah, no, definitely tell you more about it. I thought it was interesting. But I guess, yeah, so like from your perspective, like where are those like places where you feel like stablecoins are kind of going to first permeate, more commonly into society? Like when am I going to be using it for McDonald's? Am I going to be using it online for Shopify or Amazon? Or, how do we see that kind of transition?
Yeah, that's a great question. I mean, we already have data on this actually, right? If you look globally, the main adopters of stablecoins are the emerging markets in day-to-day, apart from DeFi and just high finance. Those are countries like Turkey, Nigeria, Brazil, Indonesia, India, where either the banking infrastructure is not that strong or the currency is very unstable and inflationary. And so the adoption that you're seeing there is folks holding stablecoins as a replacement for a bank account, right? Or actually as to get access to dollar banking, which they don't have in traditional banking. And so that is super, super interesting because that's like banking the unbanked and is a crazy big market. And also something that is sorely needed, right? Like you buying your, like a US person buying their latte at Starbucks it's great, it's fine, but it's not going to change the world, right? It's not going to change your life. It's already a great experience. Americans don't really need stablecoins to that extent, but those countries do. And so dollar savings, dollars checking account, cross-border payments, I think those are massive use cases and we see massive adoption there. And that's what we are in the mid to long term very interested in as well. My background, as I mentioned, is also in Africa and Brazil and Indonesia and Bangladesh, etc. So I really understand how those countries work, and their financial systems are oftentimes still controlled by entities outside of their country. Like in Sub-Saharan Africa, where I worked a lot of time and lived, especially in Burkina Faso, their currency is still issued to a large degree, with French central bank. So they're actually still somewhat of a vassal state to Europe. And so there's a real need for those countries to develop their own financial systems, their own banking systems. And I think stablecoins can play a major role, and they can, to some degree, leapfrog the Western world, just like they've done with internet connections, etc., where they went from no internet connection to 5G or 3G at that time, like broadband. They can go from almost no financial system to fully digital, stablecoin backed or stablecoin infused financial systems. And so that, I think, is really, really exciting. And the first place where we're already seeing the adoption, right? That's not even speculative, but we'll see probably a lot more adoption there.
I totally agree. And even though, like, I would say I felt the same way about like getting unbanked until a few years ago, but even in the US, there were so many people getting unbanked lately. Businesses, they say the wrong thing on Twitter, all of a sudden their business gets unbanked.
I got my bank account shut down.
Really?
Because some crypto stuff. I did a withdrawal from an exchange, and they were like, nope.
Right? Yeah, they're just really pissing people off. People are ready to just tell them to screw off and just do their own thing. And I think people are way more comfortable than they used to be here, for sure. So I think it is, you're at the right place, the right time. I guess, what would you tell people about like the importance of like building these things on Bitcoin as opposed to other chains, other places, for people that just don't really understand? What would you tell them?
It's a great question. I think that the average user doesn't really care if it's built on Bitcoin or Ethereum or Solana or a centralized bank ledger to that extent. And that's fair enough, right? As a user, it's just like, I don't care how my plane is like constructed and flies. I just want to use it. I want to have a good user experience. I want to be safe. I want to get there on time.
Yep.
And so why we do need to build it on Bitcoin. It's really to like the more in-depth builders and hodlers and like I guess also people like you content creators that need to propagate this idea and understanding is that Bitcoin really, in my opinion, is the only decentralized ledger that we have. Like decentralization is a spectrum, but if it's the most decentralized and it's really the only one, in my opinion, that is truly resistant to major corruption, at least in the short term, because the way that proof of work works, the way that mining works, and the whole consensus algorithm on Bitcoin just makes it the most robust settlement layer for the world, for the financial system of the future. Now, the user experience on Bitcoin obviously is not that good, but there's a lot of solutions that are building that out and making it a lot better, including rollups that actually verify state and consensus of the L2 on Bitcoin, which is super exciting because that will mean that it's really truly, those systems are truly backed or secured by Bitcoin. And so, in my opinion, if we're building a new financial system, we're going from a fully centralized central bank system to a decentralized system, and we want to have as much freedom and prosperity for everybody on the planet, not just the elites, then we need to build that on Bitcoin because that is the most secure foundation. And if you look at history, the way that decentralized systems implode or get corrupted is slowly over time, very slowly over time. They get like infiltrated, and small decisions over hundreds of years leads to then a complete centralization at some point. And so you need a base layer that is as resistant as possible because it will get attacked. There's no question about it. We might have a golden age for the next 20, 50, 100 years, but that will also change, right? We're coming out of the dark ages and going into the golden ages. There's no question about it. I think everybody sees that now, but it will not last forever. And so if we want to make that last for as long as possible, it needs to be built on Bitcoin.
I totally agree with you there. All right, last question. This one just kind of came to mind. I know Tether has been like stocking up hard on like U.S. Treasuries. Like, do you see that as being like one of those risks where, like, say we just default on the debt? Is Tether screwed all of a sudden? Or some of these other stables that have followed their lead and done that in a similar boat? Like, what are some of maybe the risks of your competitors that other people might not be paying too much attention to? Maybe get them out ahead of the next one.
Great question. There's a lot of, I think, risks that are very much underappreciated, and it's really hard to understand how big those risks are, right? But Tether holds, I think, $100 billion of treasuries or somewhere along those lines. That's their whole business model.
One of the largest holders of treasuries in the whole world.
That is not a country, right? It's bigger than a lot of countries. That's their business model, right? They hold, basically their assets are treasuries, their liabilities are dollars, and the treasuries make yield. They create a coupon, and so they take that excess coupon and excess yield, and that goes into their pockets. That's why they made, I think, $13 billion in profit.
More than Goldman Sachs, yeah.
Yeah. Fantastic business. I think everybody's envy of a business because it's also like, I think, less than 100 employees, which is like ridiculous. What are the risks there? As you mentioned, obviously, if you hold government debt, if that government, one, doesn't want you to exist, it has you by default. And if that debt, for whatever reason, defaults, obviously it's the most secure debt in the world because it's secured by the printing press. But there are scenarios where that can go wrong. Then obviously the asset side of the protocol, if you see Tether as a protocol, their assets would become impaired and worth less. And that could lead to a situation where Tether depegs. I mean, that would probably be the least of our problems because if the US government defaults, the financial system is pretty much done, but there's certainly that risk. And as I mentioned, they're obviously beholden to the US government. And so it's a dollar that is still in the system. Yeah, it's represented on chain as a stablecoin, but the underlying assets are still in the system. It's still like their assets are still held in a bank or in a brokerage, right? Whereas with our system, the assets are not in the fiat system. It doesn't mean that we don't have to comply with laws. We obviously have to comply with laws and regulations, but the assets are within the crypto system. It's fully outside of fiat. And so there's obviously different risks and benefits to that.
That's awesome. No, that's super interesting. And I think you do a great job of just demystifying it. I think this stuff is really complicated to people. They don't understand how an asset is backed and how you generate yield. And like, this stuff is really complicated. So I can understand why a lot of people have, gotten into things that they don't fully understand, gotten burned. They're a little hesitant to believe that these yields exist. I mean, that's what has always been crazy to me is like these yields do exist. I've watched the funding rates for years. I know people are paying the money for it. And so it's like just creating that system where you just connect those dots together and get people to understand that, they can earn a real yield and they can get out ahead of inflation. And, there are assets you can hold that people will pay to borrow.
Yeah, and make it available to them, right? Like, exactly. you can see the funding rates and they're real, and you can look at the data and it's all there, right? You can verify it yourself. But then executing that trade and executing it in a way that is de-risked, where you have multiple different exchanges, you have custodians, and you can basically just buy it as a token and you get access to that. So it's like making more sophisticated financial instruments available to anybody. I think that is our goal as a company, and USDh is our first foray into that.
Yep, you guys deal with the complexity and just explain it simply, and then create a UI where it's just super simple, one click, there you go. And I think you guys have done a great job with that. Everything is super simple to use. It's available everywhere that I want to use it. And I think, honestly, it was so successful on Stacks that yield like got a ton of people to sell Stacks just to go chase your yield. They're like, damn, I'm only making 5-6% yield on Stacks. I'm going to USDh. I think you guys already have a lot more power than you think. A lot more people interested and excited to use your product, and I know a lot of people have been waiting for something like that on Stack specifically. So I'm excited to see where you guys go with this, and we'll definitely catch up sometime soon. If you have any closing thoughts or anything you want to plug, website, anything else, feel free to go ahead.
Yeah, no, thanks for having me. It was a really fun chat, and yeah, come check us out at hermetica.fi. You can subscribe to our email list. Our newsletter is actually super active. We send out weekly updates that are very in-depth about what we're doing, anything that's happening in the ecosystems that we're active in. So that's Hermetica FI. If you scroll down, you have a sign up there. And then, check out the app and really let us know what you think. We're constantly iterating. We're constantly building. It's going to be a complete revamp of the app coming out probably next month. There's some alpha for you. That's going to be much more streamlined, beautiful dashboards, more insights into the transparency and what is really happening in the protocol. Yeah, those are the ones. Follow us on Twitter Hermetica FI, and get those yields, right? You can buy it on Bitflow, you can buy it on Valar, you can buy it on Magic Eden, DotSwap, and get in there, get some yield, and let us know what you think.
All right, I'm going to go do it. Well, thank you so much for coming by. Thank you guys for listening. We will be back with another episode soon. Have a great rest of your day and week. Thank you guys.